Hey everyone, welcome to another episode of What Works Wednesday. We are your hosts, Leland and Cody. Cody, what are we talking about today?
Today, we're going to talk about one of our most common questions that we get from real estate professionals, and it's around business structuring. I feel like all the time we get questions around LLCs, S corporations. What are they? Should I be one? And what does that look like? I feel like a lot of people get some of their best advice from TikTok. Um, so, want to kind of break out some misconceptions there.
Yeah, this is a topic that we get all the time that is also just riddled with misinformation, even from CPAs. It's astounding how much we see people who are opted into the S-Corp status from a CPA when it really didn't make sense, and we'll talk through that as well. But yeah, I always start with, should you be an LLC, yes or yes? And the answer, surprisingly, is yes. But there's a lot of misconceptions even around that. We hear people say, well, I'm taxed as an LLC, not realizing that's the same thing as saying I'm taxed as an orange. And, that's not a thing. So LLCs, the first misconception we hear is that people treat it as a tax status when really an LLC has nothing to do with your taxes. It has everything to do with your liability protection. And it literally stands for limited liability company. So we always say, yes, you should have one just to protect yourself, because unfortunately we live in a highly litigious society that likes to sue you for things. So if you're hosting an open house and you want to make it really nice and you've mopped the floors and someone slips and cracks their head open, they could sue you and then you're liable. And if you're not running your business through a limited liability company, well, now they can take your house, your car, your bank account, your money, as opposed to only taking what's inside the business.
And what's the process to become an LLC? Is there a lot of barriers to that? What does that look like if I'm hearing this for the first time?
I think, if you're a realtor, you understand that many everyday clients don't fully understand the process of buying a house. It feels really overwhelming. It's like, what is escrow? What are these things? And when you go through it, you're like, oh, it's actually really quite simple. Same thing with establishing an LLC. It is very simple. There's a couple routes you can go, like anything. You can DIY it using any tools online, either going straight to your state website or using something like Rocket Lawyer or something that's very affordable and just gets the LLC established. Or you can work with an attorney. And there's plenty of attorneys that do it. They will be more expensive, but that's because they're bringing a wealth of um, specialization and knowledge in this. Especially each state has little quirks, so you want to make sure that you're set up aligned with your state. But it's very easy. And Virginia specifically, go online to the Virginia website. It's going to take $100 and 30 minutes of your time just putting in the information, and boom, you have an LLC. Um,
Do I have to file a separate tax return if I'm an LLC?
no, this is a very common misconception. Even if we always say step 2 to the LLC is making sure you get your EIN number. It's an employer identification number. And what that does is it's like a social security number for your business. And it allows the business to be just that much more arm's length from you. And it also is what's required to be able to set up business bank accounts and start really creating that separation. But even if you have an EIN number and you're an LLC, it's still, without being a partnership or an S-Corp, having multiple owners, if it's just you, it goes straight to your personal tax return. You don't need a separate tax return. It just goes on your Schedule C, just like if the LLC never existed. And it's literally called a disregarded entity from a tax status. It says, hey, you have this LLC. It is a legal entity from a legal perspective, a liability perspective. But from a tax perspective, it's disregarded. It's just going to flow through to you. You're going to get taxed on it just like you would had the LLC never been in existence, which has pros and cons to it. You get, full self-employment tax on your profit, which isn't ideal. Some of that gets deducted. It's very complicated. But from a tax perspective, if you're just an LLC, you do not need a whole separate tax return. It's very straightforward, simple, easy to establish.
Great. And then I think the follow-up question we hear all the time is, okay, well, I hear this all the time. Become an S corp, don't become an S corp. I hear about the benefits of the S corp, but I mean, there's got to be some drawbacks, right?
Yeah, and here's the real difference. If you are just self-employed, LLC or not, you're just a 1099, how that works on your profit, you're going to get federal income tax, state income tax, and something called self-employment tax, which if you're a W-2, you pay FICA, like your Social Security, your social benefits at 7.5%, and your employer does as well. So about 15. And when you're self-employed, you are employee and employer. And so you pay self-employment tax, which is 15%. So you pay double the tax for your social benefits just because you don't have a boss. And that's a real downside. That's a large portion of money, especially when we're getting into six figures. And so the benefit of the S-Corp is you get to tell the government when you were an employee and when you were just a business owner. And so you can set a salary for yourself and say, this is the money where I was working in my business. And that's going to have federal, state, and, self-employment tax on it.
Can I pay myself $2,000?
No, we'll get to that. But the business owner piece says, I own this business. I get the fruit of that. So the profit, in addition to my salary, that is just federal and state. There's no self-employment tax or FICA or payroll or anything like that on there. And so it's a real tax savings. Now, the common issue we see, like Cody was saying, is people saying, well, I pay myself $2,000 from my salary, pay the self-employment tax on that.
Sounds reasonable.
And then $98,000 is my profit. And, the IRS isn't silly. They created these rules. And so they know what you're doing, and they require you to pay yourself a reasonable salary, which says, what would you have to pay someone if they were to take over your employee role? So if you're a real estate agent, it's like, what would you have to pay someone in a salary for them to go buy and sell houses and make a livable wage off that? So you have to set it reasonably. There's,
You don't know people who would take a job for $10,000?
Yeah, no, you're not. No one in their right mind would go say, I'm going to work full time for $10,000 or $2,000. So we say, just look at what's the national average or what's the state average of people who work in your profession and pick that. And that's going to be a real safe place for you. And everything above that you make, you're going to save money and self-employment tax.
So you brought up payroll.
Mm-hmm.
So how does that work? I'm a 1099 employee. How do I run payroll?
Yeah. And this is where we see people prematurely opt into the S-Corp, right? Is they just, they don't set a salary for themselves, or they just think they're going to save money. But with an S-Corp, you're really kind of leveling up your business. You're creating some extra formality to it in order to get that benefit of saving in taxes. But in order to do that, you have other administrative costs. Well, now you do have a business tax return. So you have to pay someone to prepare that. Now you have more elaborate books and records, things like not just a profit and loss statement, but a balance sheet, cash flow statement. You have to kind of maintain your books a lot more thoroughly. So many times that's when people get bookkeepers. And you have to pay payroll. You have to have real W-2s for yourself, real pay stubs that make sure if you got audited, the IRS can see that you are paying yourself a legitimate salary and paying that self-employment tax piece on that. So what we find is many people, don't pay themselves a salary, don't pay a reasonable salary, or don't have a payroll system set up. They're just sort of making it up on the back end, which creates a lot of liability.
So if I'm just starting out, does it make sense for me to I think I'm going to be really successful in my business. Does it make sense for me to immediately become an S-Corp maybe year one?
Mm-hmm. And that's the question we get, is basically like, okay, sounds great. I see the benefits. When does it make sense to be an S-Corp? Most CPAs, if you talk to them, will opt you into it immediately, because if you think about it, at any income level, hey, I made $40,000 in commissions. I pay myself a $35,000 salary. Well, I saved self-employment tax on $5,000. So at any income level, you will save in taxes if there is any profit. The downside is you've now taken on all this added administrative cost. So, business tax returns, $1,500, $2,000. Payroll, that's, $50 to $100 a month. Bookkeeping, that might be a couple $100 a month. And so we find, people who, I opted into the S-Corp right away. It's like, okay, great. You saved $500 in taxes, but you paid $5,000 in administrative expenses in order to maintain this properly. So while yes, it can save you in taxes, we want to make sure that you're going to save more than the added administrative cost, right? So we tell realtors specifically when we look at it, hey, we want to make sure that you are at least at the bare minimum producing a $65,000, $75,000 profit, not gross, after all expenses. What are you taxed on consistently? If it's just 1 year, hey, let's hold off for a little bit. Let's make sure, because what we don't want is you to opt into it and then the next year make less and it not make sense for you.
Yeah, and I think that consistent piece is really important because of the variability of real estate professionals, right? Like, it's very seasonality, and a great market, you could make double what you make on an average year. And so I think that is an important piece of that S-Corp, you know, um, election. But what, say you become an S-Corp and then you make way less next year?
Well, and that's an important thing to know is when you opt into the S election, you can get out of it. But if you get out of it, you cannot get back into it for at least 5 years. It's not as simple as a switch where you can turn it on and off. This year, it makes sense to be an S Corp. Next year, I'm going to file as an LLC. It just doesn't work that way. And so, yes, you can opt in and then opt out, but then you have a 5-year penalty to be able to opt back in. So we don't take this decision lightly. It is not hey, boom, day one, you should do it. It's not even, hey, you just passed that income threshold, you should do it. It's hey, we want to see a little bit of consistency here. We have had people who, they've got some recurring revenue. It's, my property management side of my business is consistently at this profit margin. Great. We can tell there's going to be some consistency there. But if you're kind of teetering on that line, we don't want you to do it. Now, we've had horror stories where, we had someone who had
Just recently, yeah.
hundreds of thousands of dollars, like every year, consistently hundreds of thousands of dollars in profit, who had never set up an LLC, was commingled, and was not an S corp. And so when we filed their tax return for them, we had to tell them, you have to pay about $50,000 just in self-employment tax. That's not your state and federal. And we could avoid that or dramatically reduce it by setting a reasonable salary for you and letting the rest be profit. And, that's one strategy. It's not like he or she had to do any sort of extra, I got to put money places. Many deductions require you to put money places. It's like just file some paperwork, structure your business properly, and immediately you're going to save tens of thousands of dollars in taxes.
And I think that's why it's also important to meet with a professional to kind of know when to take that, to the next level. Because if they would have met with us sooner, we would have probably become an S Corp, years prior.
ago.
But they didn't know. And we come across that very often. Someone will say, I owed a bunch of money in taxes, finally went to a CPA, and they were like, oh, well, you should probably become an S Corp. And you don't know what you don't know, right?
Mm-hmm. Totally. And that's the hard thing is you really don't know. And it is hard. And these days it's also even hard. Like, again, many CPAs are great and many CPAs will just auto S corp you because, again, they're just thinking about taxes. They're not thinking about all the administrative side to it, the legality side of it, the financial planning side of it. And it will save you in taxes, and their job is to save you in taxes. So from a one-sided picture, yeah, an S corp makes total sense. And that's what you will see on social media. You'll see people saying, like, automatically become an S corp, pay yourself the lowest possible salary and save all this money in taxes. Great. Well, if it was that simple, that would be the default that everybody did all the time. And you would the IRS wouldn't care. But the IRS created these rules because, again, I'm a firm believer that they love small business owners. They want to create these structures to encourage us to grow our wealth. But at the same time, they don't want to be abused on that. And so the first thing they do when they review an S corp return, if you get audited, the first place they're going to look is owner's compensation line. It's a whole line. What did you pay yourself as an owner? And is that reasonable? And so, it's really important that we get it right when we do it. Again, it's not daunting. It's not hard. It's not a lot of work, but it's just simple systems and processes to make sure that when we're making these key decisions in our business, they're done well. And now it's rocket fuel to our life.
I think this conversation is so helpful. And the theme of what we say to most real estate professionals is we want you to think of yourself as a business owner, right? And you get to that level where you start thinking like a business owner. These are kind of the decisions that you start to be making. Business structuring doesn't come into play as you're, making sales, right?
Mm-hmm.
And so I think it can be really, really important to kind of, as you're thinking like a business owner, you start thinking about business structuring. You start thinking about other tax planning things that can be jet fuel to you because, as you're saying, right, you're adding some administrative costs, but there's not like you're spending a ton of money to save in taxes, right? The return.
Yeah.
And depending on the level of income, but if you're making 200,000, right, this could be a no-brainer.
Yeah. It's like, would you rather have, 60% of $100,000 or, you know, 80% of $95,000. What actually gets you the best bottom line?
Yeah.
And we tell people you have to pay the IRS. We all do. You don't have to leave a tip. We're not trying to get you to this tax-free life that's $0. Like, that's just not realistic. But we want you to be hyper efficient so that for every sale you close, more of your hard-earned money is kept in your pocket, able to be transferred to your personal life, and then grow your personal life. We don't want realtors spinning their wheels, working late nights and hours and making great money on paper, but then overpaying in the IRS or not being efficient, and then unfortunately not being able to build the life that they ultimately long for.
Yeah, I think this was a great conversation. Thinking about just like what is an LLC, I think it's a huge misconception that we hear from most people. So I think this conversation was super good.
Yeah. So go forth, make sure your business is structured properly, save your money in taxes, and build the life you long for. Before you go, I want you to know that this podcast is not intended to be tax, legal, or investment advice. The opinions shared by me or my guests are just that. They're opinions. So if you're thinking about implementing any of the information or thoughts from today's episode into your life or business, I encourage you to seek counsel from a professional who knows you and your specific situation and goals. Now go forth, forge your path, and prosper.